Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez. Today we are going to be going through the BitMEX tutorial 103, and this episode will be all about how to short sell, as well as how to enter stop entry orders. Using a stop order to enter a position opposed to using it as a stop loss. So we will be going over those two things today. This should be a pretty quick episode, and for those of you that are already comfortable with how to short and how to enter via stop entries, then feel free to go ahead and move forward to the following episodes. That's when we'll start to get into a little bit more advanced stuff. We'll be doing some more practice trades, and then we'll be looking at how to calculate leverage, the difference between cross and isolated leverage, and then in the final episode we'll be looking at futures, hedging, arbitrage, and the basis. So with that being said, I will go ahead and share my screen. So the last 101 and 102, we were looking at the test net version, and I am not seeing what I was expecting, so let's try that. Okay. Using the test net version on the first couple episodes, and I do not recommend using the testnet for more than just getting yourself comfortable with the platform. Like, once you know how to go ahead and enter an order, then it is time to go ahead. Once you just know how to use the platform, entering the orders and knowing where to look for the contract details and that sort of thing, once you're comfortable with what you are dealing in, that's when it's time to go ahead and move to the real money site. And what I strongly recommend is to start out with a very nominal amount of money that is not zero. The testnet, you're not going to learn how to trade on the testnet. All you're going to do is learn how to use the interface. Okay, I can't stress that enough. The testnet is to learn how to use the interface. Once you have that, the testnet isn't really good for anything else. You're not going to learn how to trade on the testnet. It's very similar to poker in terms of there's play money poker sites, but there is very little that you can learn playing for play money. You can become the best player in the world, but if you can't manage the emotions and manage risk and execute in real time in the heat of the moment when there's actual money on the table, then you might as well just give up before you start, essentially. So that's where I'm a big proponent of starting with a very, very nominal amount of money while you're still, now that you understand the user interface, well, let's go ahead and put some trades into play, but literally less than 1% of your money, like even less than 0.5%, where if you've got $10,000 that you think you want to kind of put to work, well, put $50 down and then practice a little bit using that until you can really feel comfortable using trading with real money. So one thing that I will say quite a bit is to start small and think big. If you can, consistently make good returns on a small account, then at any time you can go ahead and increase that exposure, and you should be able to basically maintain, some sort of similarity of those returns with a greater exposure now that you have confidence and a bit of a, just maybe a little bit more of a proven track record. You can't go the other way. If you start with all your money, if you got 10,000 and you put that all to play, if you blow that account up, now you're done. Opposed to if you just start really small and really learn the ins and the outs. Like for me, when I started trading on leverage, what I did was I deposited less than 1% of my money onto an exchange, and I said that I will not use more than 5x leverage unless I can 10x this account. So I remained very, very disciplined in that leverage is absolutely going to be like adding gasoline to the fire. If you're a losing trader and you're starting to trade on leverage, then you're just going to lose faster and lose more, and the losses are going to be much more significant. Whereas if you're a winning trader, then you should be able to add gasoline to your fire and win more. So there should never be a rush. I mean, if you're a winning trader, then you should be able to take some time to establish some sort of track record with a small account. So that's something that I strongly, strongly recommend, is to whatever that means to you. To me, it was I deposited maybe 0.5% of my bankroll, and I treated it like it was all the money in the world, because if I lost that, then it was really going to give me very little confidence about trading on leverage. A lot of people will be very, very strong in their belief that you should never trade crypto on leverage, and there's very good arguments to support that, especially if you don't have a proven track record. So this is a little bit longer than I was wanting, but I think it's very, very important to set up your own limitations, set up some goals, and if you can reach those goals, then go ahead and increase exposure. So after I did 10x that account, then I deposited quite a bit more, and ever since I've been trading with leverage, and have found out that 5x is a pretty darn good amount for me, because my stop losses are generally very well inside of a 20% move. My stop losses are almost always getting executed between 5 to 10%. If it moves against me, somewhere in there. If it goes 15%, that's big. So therefore, using 5x leverage doesn't put me in danger of being liquidated the large majority of the time. And the other times, I'm always free to add leverage, because I am very careful to never overexpose myself. So when I am showing people how to use this platform, it is very, very, very important to me to even if I'm beating a dead horse, to really express how important it is to start small and think big. If you can really establish a track record on a small bankroll, then you can do the same thing on a bigger bankroll, but you can never go back. One of my favorite quotes that I've ever read is from Ugly Old Goat, and he says that very few small traders become big traders, and the savvy big traders choose to become small traders again. That is something that I believe in very, very, very much. Whenever I'm depositing onto a site to trade, I'm usually depositing like 5 to 10% of my account. Now, I'm not what a lot of people would consider a big trader, but still, I'm very diligent about the money that I've built. I do not want to risk that unnecessarily. So I really, really like Ugly's approach, and it's one that I employ myself, in terms of he likes to deposit something like 2 Bitcoin, he'll run it up to 20 Bitcoin, and then he will start all over again back at 2 Bitcoin. That's maybe a medium big size trader, whatever you want to say, deciding to come back to being a small time trader. That's how you sustain in this environment. So long-winded spiel there, but very, very important. The rest should be pretty straightforward, and there's a big concern of mine of showing people how to, short, but them not really understanding how diligent you need to be with your risk, especially when you're trading on leverage. So I am going to be drinking a Coors Light. I hope that doesn't bother anybody who is tuning in. This is late at night for me. It's about 9 p.m. on Friday, and I am at home working. I've been working late for a while now, and I don't feel bad about it. Enjoying a couple beers as I walk through this, so I appreciate everybody who is not concerned with that, and cheers to anyone out there. All right, so we are going to look at how to short and how to enter stop orders. So let's just start out with how to short. So I've deposited a very small amount of money into my bank account on BitMEX, 0.0045 BTC. It's not play money. I don't want to lose money. If I lose that, I mean, that's like a steak dinner. I don't want to lose that no matter how much money it is relative to my overall trading role. So I will always be very diligent with my money. Just because it's a small amount doesn't mean I want to turn into a gambler and start throwing it away. So let's go ahead and look at entering a short for a very small amount, and just seeing how this position comes together. So from previous videos the difference between market and limit orders. Since we are on a time restriction here, I will be using market orders. Generally, 75% of the time I'll use limit orders. Sometimes I'll use market orders, and that'll just come through experience of knowing when is it worth it to just go ahead and take a market, when can you afford to use limit orders in order to capitalize on the peer-to-peer funding exchange. When I use limit orders, I am getting paid. When I am using market orders, I am paying. So let's just say we'll go $500 with 10x leverage, and that would not be, we're going to need significantly less order value there, and I must be mistaken on how much I deposited. I thought I deposited 50. It must have only been 5, because 5 times 10 still isn't going to let us get that position, so no big deal. It really doesn't matter how much it is. It's still real money that I do not want to lose. So let's go ahead and put in just 35. I just have a part of me that doesn't like to, wants to get that as close as possible. So we're going 42 is the contract value. And we're going, here's the thing for me. A lot of people are hesitant to short sell because I'm not sure why. To me, it's all the same. It's basically speculating on a market to go in a direction. If it goes sideways, not much happens, but if it goes in the opposite direction of us, we would expect to lose. And the only thing that matters to me is risk reward. If I'm risking 10% on a long, it's the same exact thing to me as risking 10% on a short. It doesn't matter. I'm entering money into a market, speculating that it's going in a certain direction based on, it's like an educated guess. I'm not completely gambling, but it's technical analysis only gives you certain probabilities. You are therefore speculating on which way this market is going to go after you enter your position. So I don't care if I'm long or short. I'm speculating on a market to move one way or the other. And it's really important to me to have the ability to go long or short. When I talked about returning 10x on an account through margin trading, that was in 2018. The Bitcoin bear market was in full force, and a lot of people were either still in denial or really frustrated with how much money they were losing and all the profits they let slip through their fingers. Well, I'm making a lot of money because I am shorting. I'm betting with the trend. The trend is down, so I'm shorting. And if I had to wait a whole year, I just have to, if I'm only a long trader and I'm devoted to only trading with the trend, then I've got to wait like a whole year and I can't take any positions when there was so much opportunity shorting Bitcoins and specifically altcoins in 2018. so much opportunity, and it was a very clear trade on the table. Bitcoin had made a massive move in 2017 and 2016, and it was clearly ready to have a prolonged correction or bear market, and therefore having the ability and confidence in myself to go ahead and enter to the short side, it's the same thing as basically like buying Bitcoin when it was back at 2000 and early 2017 or whatever, where it's like it's becoming pretty darn clear this thing looks like it's going up. So the long and the short is something that I've just never really understood why people are so hesitant to short but not long. So that is my opinion in terms of, I've thought about it long and hard, like why should I never short Bitcoin? Should I never short anything? And the conclusion that I came to is that if I'm going to be risking money and betting on a market to move in a certain direction, then it doesn't matter what direction I'm betting on it to move. That is what I believe firmly. All right, so now that we are through that, we're ready to go ahead and enter our short. And we're just going to kind of, not be nearly as diligent as we would be in terms of being patient for an entry. We're just going to go ahead and enter because I am not going to worry about the amount of money that I'm risking, and the point of this is to teach you guys not to have a profitable trade. So first thing I want to do is identify stop loss, and I'm just going to go ahead and say that above this, nope, I'm going to go a 50% retracement of this Marubozu, which is a stop loss I really like because it's above this 200 EMA. If we use this horizontal, it's below that 200 EMA. A retest of that is a sell signal. So I don't want to be setting my stop loss to cover a short at a sell signal. If you go short and then you get stopped out, remember that means you're buying to stop yourself out. If you go short, you're selling, and then a stop loss would be to buy. If you're long, you're buying, and your stop loss is to sell, right? So we don't want to buy at resistance. Let's see if we can get some drawing tools up here. A little bit outside of the scope of this video, but I think it's just an important thing as we're going through to look at the stop loss. So right here we see that this is resistance and that 200 EMA is resistance. So we do not want to be buying resistance. If we enter short here and we set our stop loss here, that would be an order to buy, and since that's resistance, we do not want to do that. Okay, so instead, another stop loss that I really like is a 50% retracement of that Marubozu. A Marubozu is an extended range candle. An extended range candle is just a candle that is bigger than average. So what you can do is draw a fib. 50% is 98.47, and we notice that is above all this resistance. So if price does break through resistance, then we absolutely do want to be covering our short. So 98.47, just another little tip, when it's that close to some sort of round psychological number, I'll always just increase it a little bit. So in this case, we'll do 98.56. I always have a pen and pad, very important to me when I'm going through this so that I can write down stop. And see, I already forgot. If I would have tried to keep that in my mind, you'll drive yourself crazy, I promise you. 98.56 is the stop loss. So the first thing that I'm always determining before entering a position is the stop. I need to know the stop in order to determine my risk. If I can't effectively determine my risk, then I cannot effectively trade. It's as simple as that. So you always start, if you're entering and you don't have an exact area where you're going to be getting stopped out, then you're going to be losing. It's as simple as that. You have to have an exact stop loss that you can trust in the heat of the moment, that if the price pumps up here, that I'm not wanting to cancel this and move it up or anything like that. You have to have a hard and fast stop loss so that you can determine risk, because without determining risk, you cannot effectively determine risk reward. And without determining risk reward, I don't know how to trade. I know people out there do, but not me. So now we're going to go ahead and sell. We do see that there's 2 million buy here. That could be a reason why some people, oh shoot, this is support. Look at all this buying. There's $2 million there to buy. Don't worry too much about that. Like we talked about in earlier episodes, it could be whale games. And even if it's not, I wouldn't pay too much attention to that. So what we're going to do is go ahead and enter a market short for 42 contracts, which we know contract value is 1 USD. We're going to enter that with 10x leverage. We could use more leverage because our stop loss is going to still keep us out before getting liquidated. And the future episode will be about calculating leverage, so I'm not going to get into that right now. We're just going to stick with the 10x. And we are going to, it's going to be important to go ahead and determine the risk. Now that we have our stop loss, we need to know what the risk is. And this is why it's important to have a pen and pad. If I didn't have a pen and pad, I couldn't trade. I promise you that. Okay, so now we look for the price is 96.19. And we look for how far that is away from our stop. So our stop is 98.56 minus, now the price has moved to 96.19. $237. We divide that by 96.19. That gives us 2.46. So now we know our risk is 2.46. That's generally a good amount. I like the rule of thumb is to never risk more than 2% of trading capital. So if you see a stop loss where you're getting about a 2.4% risk, you have to understand how that is affected by the leverage. If you're 10x leverage and your risk is 2.46%, you have to multiply the leverage by the risk. So the risk would actually be 24.63%. If we enter this position right now and the stop loss gets triggered, we would lose 24.63% of our account, or at least of the order value. So since that's a little bit off there, we would lose 24%, 0.246% of the order value. So 0.246 times 0.0043 equals 0.001 BTC. So that is what would be risked. We can see that's about 20%, 24% or so of the order value, 0.001 BTC. So now we know the risk, and we can go ahead and enter and just forget about it. If the position moves against you, just forget about it. You have to have the ability to let that stop get triggered and to capitalize on losses when it's necessary, such that you don't think you're risking one thing and then all of a sudden you're down, the whole account because you didn't execute the stop loss. Very, very important to come up with a stop loss that you can trust before you enter the position, and then after you enter to just let it ride if it goes against you. If it goes in our favor, we'll have plenty that we can do. All right, so now we are ready to go ahead and enter the position because we know where our stop is. We know the percentage of risk. We have multiplied that by the leverage, and then we have multiplied that by the order value, which gives us the overall risk to the account, which is 0.0010578 BTC to be exact. Very important to go through all of this every single time you trade. Have a checklist of everything that you need to do before entering a trade so that you don't forget. I have checklists taped to my desks. It's very important to me to have a process for when it's time to execute. I go boom, 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 click the button, don't even think about it. Very important. Okay, so now that we've gone through, it's time to click the button and not worry about it. We check. Generally, I check everything here, and I don't need this page generally. Like I'm looking at, okay, there's this price and there's this amount of liquidity. often just this screen can cause me to see big liquidity and then it disappears before I actually get my order entered. So some people like it for this, but I'm calculating that by hand. And I think that for me, it's best to just click do not show this again, so I don't need this. But for you starting out, definitely make sure I would make this part of your process until you're very, very, very comfortable with the platform, so that you have a process for entering the orders and then a process for double checking the important things: order value, leverage, available balance. And then here I check this on other in the future. So basically I do not show again, and that doesn't come up for me. But right there it did. Okay, we're filled. We're short. We're officially short. You know, nothing to be scared about. Well, there is, because we don't have our stop loss. So I always feel uncomfortable if I don't have a stop loss on the books, because you never know what can happen. As long as I've got my stop loss set, I am comfortable as can be, because I know what my risk is. I know that I'm comfortable risking that amount. I know roughly the success rate. And I just know that losses are part of doing business. So when it happens, it just happens. And that is very important. Okay, so now we need to enter our stop loss. Again, it's important to have it written down. I referred to this 3 times since writing it down. I remember trying to do all this without writing things down, so I can just tell you how important that is. Okay, so now we're going to come in and set a stop market order. I always use stop market orders for stop losses because they are guaranteed to get filled. Stop limit orders, there's a percentage of stop limit orders that will not get filled because the market blows right through you. It's a non-zero percentage. I don't know what it is. I'd estimate 10% of stop limit orders don't get filled, and that makes me feel uncomfortable. When I have a stop market order on the books, I'm comfortable. I know maybe there's going to be a little bit of slippage, and I calculated 2.5% and it ended up being 3%. That's okay, because a little bit of slippage is much better than if a market blows through your stop limit order. You can be highly certain that it's going to continue, like in a big way, to that side. So the risk of stop limit orders just simply is not worth it to me. So I always use a stop market order. And now we just make sure, basically same amount of contracts, price. And here's the other thing, is that I always click close on trigger, because this cannot open a new position, and that's what we're going to get into next. If you have a stop order without a close on trigger, it can open a new position. You can't hold 2 positions in opposite directions on BitMEX at the same time. If we're short, we can't then go long the same contract on BitMEX. So if we're short and we enter a stop market buy order without this clicked, and it's the same exact amount of contracts, then that will still exit this position. It still will be a stop loss. It wouldn't open a new position to the other direction. It would just buy 42 contracts, and the system would say, if this guy is short 42 contracts, then we will go ahead and close that position before opening anything new. So not having the close on trigger isn't necessary, but I always do it as a precaution, because sometimes you forget about orders, and I guarantee you will forget about an order if you start trading significantly, regularly. So think about this situation where I short Bitcoin at 42 contracts, and then it pulls down to, let's just say my target is 9,000. Let's say I trade the 30-minute chart, so I would only be going for a short move. And let's say it goes down to 9,000 and I'm up. That would be like 8% times 10. I'd be up like 80% of my account. So I would just want to go ahead and exit. So I cover that position and I'm out. But I forget that I had a stop market order on the books without the close on trigger. What would happen in that case is if the price rose back up here, it would open a new position, and now we're long because we manually closed when it moved in our favor, or maybe before the stop was triggered, if we manually close that and the close on trigger is not selected for our stop order, it will open a new position. And therefore, it's always best to have close on trigger for your stop market orders. Because if you forget about that and this close on trigger is checked, it means that this will never open a new position. This can only be used to stop out a position. So this is a good example of why I love BitMEX so much. A lot of other exchanges do not have the functionality that BitMEX has. This close on trigger isn't an option on the other exchanges I use. So this is just one little example of the functionality in BitMEX that sets it apart from the competitors. If I forget about a stop loss order, which I've done more times than I can count on my hands and my toes, I don't have to worry about it. It can't open a new position. Love it. Okay, so now we've got 42 contracts at the stop price. Close on trigger is selected. And we always use last. Last price traded on BitMEX. That's what I always use. If you do research and decide to do something else, go for it. But using other things has got me in trouble in the past, so I always use last myself. Now we are ready to go ahead and enter buy order. So I said to not have the screen show up the other time, but this is a different type of order. So this confirm your order will come up for every different type of order. If it's a limit, if it's a market, if it's a stop limit, if it's a trailing stop. If you're using a different order, this will come up. So if you really don't want these up, you need to don't show again every single time they come up. And this shows you, note this stop order is being submitted with close on trigger. Close orders can only reduce your position, not increase. Perfect. Order value, that doesn't really help because we're short 42 contracts. This screen just really doesn't help a whole lot, so definitely I use don't show again. Okay, so we click buy, and now see what happens. Before we had one position, now we've got one stop as well. So this is the next most important thing that you always have to do before feeling like you can just let this ride to your stop. You have to verify that your stop price is inside your liquidation price. Very, very, very important. Sometimes you fat finger the calculator and miscalculate, whatever the case may be. You just need to check the stop price will get triggered before the liquidation. If you get liquidated on BitMEX, it's a 20% fee. Thereabouts, somewhere in there. Last time I checked, that's what I remember. 20% fee to get liquidated. So if you're, let's just say that you've got one Bitcoin in a position and you're short, and if you use a stop that is just like a couple dollars before the liquidation price, you'll save yourself 0.2 Bitcoin in the event you get stopped out. If you get liquidated, you lose all of it. So understand that part. It's very, very important. That's how BitMEX builds their insurance fund, is when people get liquidated from just irresponsible trading, a big portion of that liquidation fee, that 20% fee, goes to the insurance fund. And I'm not sure exactly what portion, but that's how they build that up. And you cannot be the person contributing to that insurance fund. There is no reason to ever get liquidated. You should never get liquidated when trading on leverage. Okay? This is definitely going longer than I thought, but there are some very important topics. Like I said, what's most important to me is to make sure that if I am sharing an affiliate link, that anybody that clicks on it has all the resources they need right in front of them to know exactly how to use the platform. And also, what's most important is for me to express the risks involved. So, okay, we should never be getting liquidated. That's just very, very important to understand. If you're getting liquidated, there's a problem. There's a big, big problem. So we just check stop price 98.56. We go back to position. liquidation price, 10,622. Generally, my liquidation price will be a lot closer to my stop loss, and you heard me mention earlier that I saw we could definitely use more leverage based on this stop, but we will get into that, I think, very next episode. So for now, this is what I want to see. Liquidation happens at what price? 10,622, right up here. Okay, here, and we're going to just go ahead and draw this on the chart. 10,622. Here is the liquidation price. Okay. And can we text liquidation? And another thing that's really neat about BitMEX is that it will show you where your stop is. A lot of places will do this, but there's a couple extra things you can do on BitMEX. So here it shows our entry, 96.18. Here it shows our stop market, 98.56. If the price gets to 98.56, we take a market order to buy for the same amount that we are short, with a close on trigger, and that means that we will be out of our position if the price gets to 98.56. So there's no way that we can get liquidated. As long as our liquidation is above our stop loss, then I see no reason why not to use margin. This is something I've thought about very long and very hard when thinking about, should I trade crypto on margin and on leverage? And the answer that I came to that nobody has been able to dispute is that if your stop loss gets triggered before the liquidation price, then there is no added risk for trading on leverage as it relates to trading without leverage. As long as you're managing position sizes and you are not risking too much on a single trade. That is the conclusion that I came to, and anybody that can dispute that, I'd be more than happy to talk to you because, like I said, something I thought about long and hard. So something else just to show real quick is, let's say that, so we originally set our stop loss here based on a 50% retracement of this Marubozu, and now we're coming back and seeing that, oh man, this is prior horizontal support. So this should be resistance. If we get back here, this should be resistance, right? So now we might see, oh man, that stop loss maybe should be adjusted. And one way that you can adjust, like I said, you really don't want to be adjusting stops after you enter the position. So if I saw this after I entered, I just have to suck it up and say, screw it. If this gets triggered and I have to buy at what ends up being resistance, then so be it. Because I already calculated my risk and I can't now increase risk based on something after the fact. That's how I go about it. Let's just say that we wanted to. You could go ahead and if you move that to something like here. Now that just changed my order. See, order amended, 98.56 to 10,110. So I just changed my stop loss by doing nothing but pulling that up. So if I really, really desperately wanted to do that and move the stop loss, what I would do is make sure that I don't risk any more than I had originally calculated. So I would cover a part of that based on how much that stop was moved. So if we moved it to 10,110, I would do 10,110 minus 98.56, which was the original stop loss, divided by 98.56, which equals 2.57%. So that increases the risk by 2.57%, but we're using 10x leverage, so it really increases the risk by 25.57%. 25.77%. So therefore, if I decrease my exposure by 25.77%, I would be risking the same amount. Okay, so if I really wanted to move my stop loss mid-position, the only way I would allow myself to do that is if I was willing to decrease the exposure such that I did not risk any more. So let's go ahead and do that. 0.2577 times the exposure of 42 is 10.82. We can't do, the smallest denomination is 1, so since that's 10.82, we'll just round it up to 11. And we are short, so we need to buy long to cover. We want this to go down to 31 contracts after buying long, so let's go ahead and do that. Okay, and you saw that the order got filled. If maybe you didn't see that, we could come in here to order history, and all of our orders are right here. We've got this filled market order to sell 42 contracts. We've got this stop market, which has been untriggered, and now we have this buy of 11 contracts at 96.30. So we lost a little bit there, but maybe I determined that that's okay because I really didn't want my stop loss to be right here at prior horizontal support, which I've definitely done things like that before. Often you will realize that, man, I should have zoomed out more before I really went through all these calculations, and that was a good example. I'm going through this quick. I'm trying to teach you guys, so that was a great example of where if I zoomed out more, I would have definitely changed the stop loss. And now we see that the stop loss is still inside the liquidation, so we're good. We're not going to get liquidated. Okay, excuse me. Coors Light's drinking smooth. The mountains aren't blue anymore, so I guess it's time for another one. So that is pretty much covered how to short. I mean, it's the same as longing except opposite. I mean, it's like when you enter, you're clicking the sell market instead of the buy market. Like, that's the difference in my mind. Literally, that's the difference, is that when I come in here to short, I am doing everything the exact same way when I'm long. Calculating leverage, calculating stop loss, all that is the exact same. The only difference is that when I enter, I click a green button. When I enter, I click a red button to short, and when I put in my stop loss, I click a green button. And if I want to go long, it's the other way around. Like that's literally how I think about it. I'm pretty simplistic in that way, and maybe somebody would dispute in terms of Bitcoin is got so much potential to the upside and yada 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 that longing is much less risky than shorting. But to me, it's just not, that isn't true, because I'm always having a stop loss to where I'm getting out of my position, and therefore I am not concerned about the fundamentals of Bitcoin or whatever. I trade charts, and when the chart tells me to short, I short, and when the chart tells me to buy, I buy, and then I look for stop losses, and it's as simple as that for me. People out there have to think about this themselves. This is not advice. This is just me talking out loud about how I think about things to try to help you improve the way that you think about things. Okay, so our position is short. We've got a little bit of negative unrealized profit. We would have a little bit of negative realized profit, but since it would be smaller than 4 decimal placements, that doesn't show up. So basically what we would do right now is just forget about it. Stop loss is there. We can leave if we want. The next thing is I would just have a profit target to take partial profit at, say, the next horizontal if this does go in my favor. So we can go ahead and I don't enter these partial profit takes preemptively. Maybe I should. Maybe that's something I should think about more anyways. But let's just say, let's go ahead and pull up the horizontals at 91.65. So we're wanting to take profit at 91.65 for 20% of the position. We'll just call that 6 contracts. So we want a limit order. If we're buying in profit, we would use a limit order to have that set up. So about 20% of the contracts we would be buying at support. Make sure reduce only. And let's go ahead and do that. Order submitted. And now we see the green line on the chart that we have an order right here at support for 6 contracts to buy. It's green. So what that would do is if price falls there, we capitalize on a portion of the profit. And then how I operate is if that's triggered, I would then move the stop loss to break even, such that if the position moves in my favor even a little bit, I am putting myself in a position to guarantee myself profit. Taking 20% profit, if it moves in my favor, and setting the stop at break even means that a break even stop would be triggered on 80% of the position, and a partial profit would be triggered on 20% of the position, so we would be up net for the full position, even if this just makes one small move down and then shoots up. And seeing support here, that's a really good idea. And today is, I think, the 30th of August. If you're watching this and want to refer back to how I have been trading this environment right now, basically what I outlined to you is pretty much how I've been doing it in real time on YouTube in terms of selling, and then I took partial profit in here and put the stop loss at break even. So everything I'm telling you are things that I use myself. I'm not advising you to use them. For you, I'm just sharing my thoughts. So now we want to just close this position because I don't want to worry about this. This is just to show you guys what's going on. Normally we could just walk away and know that maybe set an alert at this price so that if this gets triggered, we're aware, we come in, we move our stop loss to break even, bada bing, bada bang, and then you let the trend go. If the trend can move in your favor, let it ride, let it ride, let it ride. That's how I like to trade. So right now we're just going to go ahead and exit this position because I've shown everything that I can about how to short. So right here you see over on the right, we have closed position at market. We can just click that and it closes our position at market. Simple as that. Another great feature on BitMEX. Or we could use this to close our position at limit. I wonder, so we could just kind of come in here at the current price, 98, up, 98, 96.17. And if you say close, limit close, I could have said don't show that again. And boom, order filled. Nice. So we go into order history, we see filled. We go into positions, we see it's no longer available. We can go into closed positions and see that we really didn't win or lose anything. We can go back to our available balance and see that, yep, that is actually the same that we started with. So cool beans. Now we come back to our stops, cancel that out. Last thing will be using a stop order to enter. Let's say that we want to short if this market breaks down local lows. This is something that I used to use a lot since kind of implementing a new approach. It doesn't require stop market entries, so I don't really use this anymore, but this is a very valuable tool that has definitely made me a significant amount of money that I would not have made if I didn't know how to use stop orders. Okay, so let's just say that we see that this is support and we want to short sell if support is broken down. So we would say like 96.16.5. Trusty pen and paper. 96 16.5, enter. And then we need to determine our stop. So let's say that if support gets broken down, we would not expect it to retrace back above here, 97.26. Let's just say that if this entry gets triggered, then we would not want to see it pull back above here. Therefore, this is going to be our stop loss. 97.26. And then we calculate the percentage. 9726 minus 9616.5 divided by the entry price of 9616.5. Risk is 1.13%. So this is how, like, anytime that I am looking at entering, this is what I'll have drawn up. It's entry, stop, risk. Every time, to where I don't even need to write enter, stop, risk, because I know that the top is the enter, below that is stop, and then to the side is the risk. Important to have just processes that you can rely on. So now what we're going to do is enter a stop market order without the close on trigger and without any positions open. If we do this, that means this will trigger. If this triggers, it will open a new position. So where are we at? Like 42 contracts. What if we did 43? Nice. What if we did 44? Nice. Now we get the full amount. Okay, so stop market. If the price is above the current market price, it will only allow you to buy, because that's what the stop market does. We're looking at selling, so we would put the price down at our entry, 9616.5. Nope. I screwed that up big time. Son of a gun. The entry was, let's just say, 92.97. Not sure how that got so screwed up. So it's really not important. I don't want to take too much more time. I just don't feel comfortable not doing this calculation. So we've got 92.97 is the entry. The stop is 97.26, so we subtract that, 429 divided by the entry, it is 92.97. So that is giving me the wrong solution. I must have fat fingered, my apologies. 429 divided by 92.97 equals 4.61%. Okay, risk is 4.61%. And now we can go ahead and enter 44 contracts, stop market entry at 92.97. And make sure no close on trigger is selected, and boom. Order submitted. And we can see that is entered right below support. So this was a swing low, and now we see we have a stop market order to trigger at 92.97. If price breaks down here at any time, we enter short on a market. If that happens and we're sleeping, we need to make sure that a stop loss order is on the books, such that if this triggers and it enters us short while we're away from the computer, we need to make sure that our risk is protected and we have a stop loss order for that newly opened position. So we already calculated that at 97.26. We make sure close on trigger is selected. We want to make sure it's the same amount of contracts. And then we go ahead and click buy. Now we get warning, stop may not trigger. This stop order would increase your position from 0 to 44 contracts on execution, but you have close on trigger selected. This option is intended for close orders only. If you proceed, this stop may automatically cancel upon triggering. If this is intentional, please confirm this action. Yes. Okay, so that's very, very important, and this is probably the main reason why I never have considered leaving BitMEX, and now that I don't use stop orders, it's not something that matters to me as much, but this is the exact situation that is not available on any other exchange as far as I'm concerned, as far as I know, and it's a very, very powerful way to trade. So let's say that we have this stop loss right here. What happens if the price comes up and hits that before hitting this? On BitMEX, with the close on trigger function, it will just, like that message said, immediately cancel. If we're not in a short position, this thing just cancels because a close on trigger can only be used to cover open positions. So if that gets triggered and we haven't had this get triggered yet, it just goes away. On any other exchange that I've traded on, they don't have this close on trigger available, such that if I'm trying to enter with a stop entry, I can't enter a stop loss until this order has been triggered. Otherwise, this would just open a new position long for me. So hopefully that makes sense. If we have a stop market order right here without a close on order selected, that opens a new position if we are not already in the other side of the trade. Okay? So since we can click close on trigger, that means we can enter a stop market order to enter, and we can have our stop loss order on the books before our position has been entered. If this does come down and trigger this and we enter, now this absolutely will act as our stop loss. It will close on trigger. That is very, very unique. I haven't found that anywhere else, and that was definitely one of the things that I could not go without there for a long time, specifically when trading patterns. If you're big on patterns, like I absolutely am, I just am now relying on other tools much more heavily. But let's say that you like trading patterns, and you've got this symmetrical triangle that maybe you think it's going to break down, maybe you think it's going to break up, whatever the case may be. You go ahead and look at what happened on this candle. Say you're waiting for confirmation. You know, you need a close below this boundary before this pattern is confirmed. So you're waiting for confirmation. Well, if you waited, I mean, look at how this thing just shot right through. It just, as soon as it came and actually broke down, it, boom. And now it's all the way down here, and you're wondering, well, shoot, do I wait for a throwback? Is it moved too far, too fast? Whatever the case may be. But what if you had a stop order entered, you know, somewhere in this area? Then you can go ahead and enter a position when a pattern, as soon as a pattern is confirming. Basically, you do see that generally you want to wait for closes, but here, every time we've wicked down, we've come back up. But notice how every wick has been a higher low. Higher low, higher low, higher low. This is close, but it's still higher. So what you can do is use the higher lows as the area to go ahead and enter, and assume that if we do finally create a lower low, that this thing is going to continue down. So maybe you decide that it's right here. Maybe you decide it's right here. And now you can enter a stop market order that will allow you to enter even if you're not at your computer. And that's something that is very, very valuable. Also, if you're trading the TD sequential, imagine if you are waiting for, let's just say that this is a green 1. And you want to enter on a green 2 above a green 1, but you don't want to sit at your computer for 24 hours straight waiting for that to occur. What do? Is you enter a stop market order right here to buy above, you know, the high of this candle. So if this gets triggered, it is a green 2 above a green 1. and therefore you want to enter, and you can go ahead and put a stop loss in before that is even triggered right here. And if price comes, and if this is what happens, this stop loss order, if it has the close on trigger selected, it just gets deleted and disappears. Whereas if this got triggered to enter, now that's a hard stop that's in place that will always be there for you to protect that risk. So definitely took a lot longer than I wanted, but it is some very important topics that I think we covered. I haven't really seen some very comprehensive videos that goes into all of these things out there. I'm sure it is, but this is something that I think is a little bit unique and should provide a lot of value to those who are either new to trading or new to shorting or potentially don't understand stock market orders. So this was BitMEX tutorial 103. We will be following this up with 104 and 105 and 106. 104 will be how to calculate leverage. I got close to delving into that today. I'm glad I didn't because it is running longer than I thought. So we will calculate leverage and understand the difference between cross and isolated leverage. Very quickly, I'm just going to share screen once more. I thought that I would be able to, yep. So we just see cross leverage right here and isolated leverage. This is pretty unique to BitMEX, having these two options available. So we will be going over that in 104, and then we'll be moving on ahead to futures, hedging, arbitrage, and the basis. So thank everybody for tuning in, and cheers to anyone who's out there and enjoying a ice cold beverage themselves. And I will look forward to catching up with you guys on BitMEX tutorial 104.